If you missed Nvidia, if you missed Palantir, stop beating yourself up over it, because what I'm about to show you is bigger than both of them put together, and almost nobody is looking at it yet. I've been putting money to work in markets for over 50 years now. I've caught big moves. I've missed big moves. I've made mistakes that cost me more than most people's houses. And I've learned more from those losses than I ever learned from the wins. And when you've lived through enough cycles, you start to notice something that never really changes. The obvious trade is never the one that changes your life. Nvidia was obvious once everyone could see the chips the whole world suddenly needed. Palantir was obvious once the government contracts started stacking up in the headlines. But the biggest money in any boom, going all the way back through history, almost never goes to the company everyone's already talking about at dinner parties. It goes to the layer underneath, the boring, unglamorous, overlooked layer that has to exist before the exciting part can even function. That layer is being built right now quietly, with almost no attention on it at all. I'm going to walk you through exactly what it is, why it's genuinely bigger than the last wave, and how to think about it the right way, because I promise you, having the right idea and still losing money on it is the most common story in this entire business. And I don't want that story to be yours. Before I go any further, do one thing for me first. Hit subscribe right now before you keep watching, not after you're done and you've forgotten. I'm not going to dress this up as some small, harmless favor. What I'm about to walk you through took me decades of getting things wrong, of losing real money, to figure out properly. I'm handing it to you for free right here, right now. The only price I'm asking in return is 30 seconds of your time to tap one button, because this is not a one video conversation. And if you don't subscribe, you won't see where this goes next. Subscribe now, then let's get into it properly. Here's the thing almost everyone gets wrong about this AI boom. And I got it wrong myself for a good while too. So I say this without any judgment at all. When people hear artificial intelligence, their mind jumps straight to chips, Nvidia semiconductors, the brains of the machine. And look, that part of the story is completely real. It isn't type. The demand for raw computing power is genuinely extraordinary. And it isn't slowing down, but chips are maybe a third of what's actually happening underneath the surface. Go back through economic history and you'll see the exact same pattern play out again and again. And once you really see it, you cannot unsee it anywhere. Every time there's a major technological shift, there are two parts to the story. There's the part everyone gets excited about, the part that fits in one headline, and then there's the part that actually has to get physically built for the exciting part to work at all. And it's that second unglamorous part where the real, durable, generational fortunes tend to get made. Think about the gold rush for a moment. The people who got rich in large numbers, in real numbers, weren't mostly the miners standing knee-deep in a river panning for flakes of gold. It was the people selling shovels and picks. It was the people building the railroads to move supplies in and gold out. It was the banks financing the whole operation from a safe distance. Think about the early internet. Everyone remembers the flashy .com names that soared and then completely collapsed. Fewer people made the connection that the actual fiber optic cable buried in the ground, the physical pipes carrying all that data, That's what mattered for the next 20 years, long after most of those flashy names were forgotten entirely. The AI boom is following that exact same shape right now. We're at the stage where the flashy, obvious part has already run its first big leg, and the boring structural part underneath it is only just getting started. So what is this hidden layer really? Every major technology company on the planet right now, and I mean every single one of them without exception, is locked into a spending war that it's almost impossible to fully wrap your head around. When you first hear the numbers, we're talking about hundreds of billions of dollars a year pouring into building out the physical capacity to run these AI systems, and serious estimates for next year push that figure past $1 trillion spent in a single year on a single technological shift. That is more money than the entire yearly economic output of most countries on this earth. Sit with that for a second, because most people hear a number like that and it just washes over them. It shouldn't. And here's what almost nobody stops to actually ask themselves: where does all of that money go? It doesn't go into a chip and simply stop there. A chip needs a building to sit inside. That building needs a foundation, poured, a physical structure raised, and cooling systems installed so the equipment doesn't overheat and destroy itself within days. It needs electricity, an enormous, almost unbelievable amount of electricity, far more than most existing power grids were ever designed to handle. Somebody has to generate that power from scratch. Somebody has to get it from a power plant to that building without the whole system buckling under the load. And somebody has to make absolutely sure that once you've connected trillions of dollars of sensitive company and government data to these AI systems, a hacker sitting on the other side of the planet can't simply walk in the back door and take all of it. None of that is a chip. All of it has to exist before the chip means anything at all. There are well over 100 massive data center projects underway right now just inside the United States, each one requiring this entire chain of physical construction, power delivery, and security before a single AI model ever runs inside it. I want to slow down here, because this next part is the piece that took me years of actual losses to internalize. And once it clicked, it changed how I look at every single boom that's come along since. Markets fall in love with a story you can explain in one sentence. Nvidia makes the chips that power artificial intelligence. That's a sentence a 12-year-old can understand in about 2 seconds. And that is exactly why it captured so much attention so quickly. But the businesses that actually capture value from what has to get built underneath a boom, those stories take 3 or 4 sentences to properly explain. And most investors simply do not have the patience to sit through 3 or 4 sentences before they've already moved on to the next headline. So that impatience is not some small, forgivable flaw. It is, in my direct experience, the single biggest reason ordinary people consistently miss the second and third waves of every major economic shift in history. They wait around for the story to become simple again before they act. And by the time it finally becomes simple, the price has already moved without them. I've watched this exact pattern happen with railroads, with electricity, with telephone lines, with the early internet, with mobile phones. And now I am watching it happen again in real time with the physical build-out underneath artificial intelligence, the pattern itself never changes. Only the names attached to it change from one decade to the next. Let me give you a real sense of the scale of the bottleneck here, because this is where it actually gets interesting for anyone paying attention. The genuine constraint on this entire boom right now is not computing power, it's electricity. The power grids that were designed decades ago for an entirely different world are now being asked to deliver amounts of energy to single buildings that used to be enough to power whole small cities. Utilities cannot move fast enough to keep up. Permitting new infrastructure through the normal channels can take years that these companies simply do not have. So companies are now building their own dedicated power generation specifically to feed these data centers, often natural gas plants designed, built, and switched on in a fraction of the time a traditional utility could ever manage, sized precisely for one customer's enormous appetite. That is an essentially new category of construction and engineering work that barely existed at this scale 5 years ago, and it is now one of the fastest growing segments of the entire economy. Underneath that sits an even less visible problem, the physical wiring problem. These AI systems don't run on a single chip sitting alone on a desk. They run on thousands of chips clustered tightly together, and those chips are only ever as fast as the connections between them. You can build the single most powerful processor the world has ever seen, and if the wiring linking it to the next 10,000 processors is even slightly too slow, the entire system crawls to a halt regardless. So there is now an entire industry dedicated purely to solving that connection problem, moving data between chips at speeds that would have sounded like science fiction just a decade ago, and delivering precise, perfectly stable power to racks of equipment that behave more like a starving animal than a normal piece of electronics ever did. And above every layer of that sits security. Because once you've connected an organization's most valuable data to autonomous AI systems that can read files, make real decisions, and take actions without a human checking every single step along the way, you have created a target that simply did not exist in this exact form before. And somebody, somewhere, has to guard that door around the clock. Let me tell you about a mistake I made early in my career, because I think it explains this better than any theory could. Decades ago, I got extremely excited about a technological shift that I was completely right about. The direction of travel, the size of the opportunity, all of it, I called correctly, but I put my money into the flashiest, most talked about name in the space, the one everyone else was piling into at the exact same time, instead of the quieter businesses underneath it that were actually going to survive the inevitable shakeout when the correction came. And it always comes. That flashy name got cut in half, then cut in half again, and never fully recovered. Meanwhile, a handful of the boring supplier companies underneath that same trend, the ones nobody wanted to talk about at parties, quietly went on compounding for another decade. I didn't lose money because my reading on the technology was wrong. I lost money because I confused being right about a trend with being right about which specific business would capture the value from that trend. Okay, those are two completely different skills, and conflating them is one of the most expensive mistakes a person can make in this business I see the exact same confusion happening again right now with artificial intelligence, and it's part of why I'm spending this much time walking you through the difference. It's also worth asking yourself honestly how large this particular wave could actually get, because the answer changes how patient you should be willing to be. We are still, by most reasonable measures, in the early to middle innings of this build-out. The amount of physical infrastructure required to support the current generation of AI systems is already staggering, and every serious forecast I've looked at has that number continuing to grow for years, not months. That matters because the businesses sitting underneath this trend aren't relying on a single good quarter to justify their valuations. They're sitting on multi-year backlogs, contracts that are already signed and scheduled, which gives you something rare in this business, a reasonably clear line of sight into future revenue rather than a hopeful guess. That doesn't mean prices only go up from here. Nothing works that cleanly. It means the underlying demand driving this entire wave has real staying power behind it, which is exactly the kind of setup I've learned to pay close attention to over the years, rather than chasing something built on a single headline that could evaporate by next quarter. Now, I'm not going to stand here and hand you 5 ticker symbols and tell you to go buy them blind, because that isn't investing. That's gambling with extra steps in between. And I have personally watched too many people get financially destroyed doing exactly that over the years. What I want to give you instead is the actual way I think about identifying where the real value sits inside a wave like this, because a working framework will serve you far longer than any single stock name ever could. First, I ask whether the money flowing into an entire industry is genuinely accelerating right now, not whether it's fashionable, not whether it's trending on some app, but whether real capital, the kind that actually shows up in signed contracts and hard earnings reports, is pouring in faster than it was flowing a year ago. Second, I ask whether a company is genuinely the best in its category, not simply a participant riding along on the wave for free, but the company that others in the same space are forced to compete against on quality, on margins, on the size and reliability of its order backlog. Third, and this is the step almost everyone quietly skips because it feels backward to most people, I want to see the market already agreeing with me before I commit real money. I do not want to be the very first person in the door. Being early and being flat out wrong look identical for a very long stretch of time, sometimes years, and the stock price itself, whether real momentum is already building underneath it, tells you something no spreadsheet on earth can tell you. When all three of those line up together, an industry that's genuinely accelerating, a company that's genuinely best in class, and a price that's already confirming the story, that's not a guarantee of anything. Nothing in this business is ever a guarantee, but it is about as close to a real, repeatable edge as this profession honestly has to offer anyone. Here's the part I actually care about more than any of that, and it's the part almost nobody wants to hear because it doesn't make for a flashy thumbnail or a viral clip. The single biggest risk sitting in front of you right now is not picking the wrong company inside this trend. The biggest risk is you. I have personally handed people extraordinary winners over the course of my career. Stocks that went up staggering, life-changing amounts, and then watched a huge share of those very same people end up losing money on them anyway, purely because they never had a plan for what happens after the stock goes up. They fell in love with the story instead of respecting the cycle underneath it. Every single boom, without a single exception in the entire history of financial markets, eventually gets overextended, corrects hard, and cleanly separates the people who build lasting wealth from the people who watched real wealth quietly slip through their fingers, because they couldn't tell the difference between genuine conviction and stubborn pride. The old idea that you simply buy something good and hold it forever no matter what happens around it, that idea has quietly died over the last couple of decades, and most ordinary people never got the memo. Capital moves faster today than it has ever moved in the history of markets. It follows hard evidence. Now, not loyalty, not sentiment, not nostalgia for how things used to work. If you don't build real discipline around recognizing the moment when the conditions that got you into a position have genuinely changed, it will not matter one bit how good your original idea was. I have personally seen brilliant, entirely correct calls turn into painful, unnecessary losses purely because nobody involved had a rule for taking profits along the way. And I have seen perfectly mediocre picks turn into solid, respectable outcomes purely because someone respected their own exit discipline the whole way through. The skill of knowing when to sell is not some minor footnote tacked on to the end of investing. For most people, it is genuinely the entire game, and almost nobody out there is ever properly taught it. I also want to say something about patience here, because it matters more than people give it credit for. The businesses I'm describing to you today, the ones building power plants, laying the physical connections, guarding the systems, are not going to double overnight the way a hot momentum name sometimes can. Their growth tends to be lumpier, tied to contracts, backlogs, and construction timelines, rather than a single dramatic headline. That is not a weakness. That is actually a strength if you understand it correctly, because it means the story takes longer to become obvious to everyone else, which means there is more time for patient, clear-headed people to actually act on it before the crowd shows up and the price runs away from the fundamentals. The mistake most people make is treating every investment like it needs to prove itself within a few weeks, or they lose interest and move on to the next shiny thing. That kind of restlessness has caused more people more money over my lifetime than almost any single bad decision I can think of. So here's what I genuinely ask of you as you walk away from this. Don't spend the next hour thinking about 6 clever names to go type into some app on your phone. Walk away instead of understanding the actual shape of what's happening in front of you. $1 trillion a year is being poured into physical infrastructure that barely existed at this scale 5 years ago, into power generation, into data center construction, into high-speed connectivity between machines, into precision power delivery, and into security for autonomous systems that can now act entirely on their own. That is not some small niche corner of the market. That is the plumbing underneath the single biggest technological shift most of us will ever witness in our working lives. And plumbing, unglamorous as that word sounds, is exactly where fortunes have quietly, patiently been built in every major boom that came before this one. Your job now is not to chase whatever name everyone else is already excited about. It is to understand the underlying pattern well enough that you can recognize the next layer of it before it becomes obvious to the whole world, and to have the discipline to behave like a genuine owner of a business rather than a gambler chasing a headline. Once you're actually in it, I have personally made both kinds of mistakes in my own life. The mistake of being too early and losing patience, and the mistake of holding on far too long out of nothing but stubborn pride. The only real cure I have ever found for either one is a system that you actually follow in the moment, instead of your own raw emotions taking over when the pressure is on. Build that system for yourself before you actually need it, not after you've already lost real money, learning the hard way why you needed it all along. Write down in advance what would have to be true for you to buy and what would have to change for you to sell, and then actually follow what you wrote when the moment arrives and your emotions are screaming at you to do the opposite. That single habit has saved me more money over the decades than any individual stock pick ever made me. If this gave you a genuinely different way of looking at where the real opportunity sits right now, don't just scroll past it and forget about it by tomorrow morning. Share it with one person you know who's still only thinking about the obvious, already famous names. Because the difference between catching a wave early and simply reading about it years later, after the fact, usually comes down to who was willing to sit in the room and explain the boring part out loud. I'll see you in the next one.